following is a paid advertisement program provided by Premier Investments and Wealth Management. An airing of the program is not to be considered an endorsement or recommendation. The opinions expressed are those of the hosts, guests and callers and not necessarily of KFXR or iHeartMedia. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments and Wealth Management and LPL Financial do not provide tax advice. Please consult your tax professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal.
The views and opinions of this show are those of Premier Investments and Wealth Management, their guests alone, and do not reflect any other entities. The information in the following program should not be construed as an offer to sell and is not intended to replace the advice of a qualified tax advisor or legal counsel. Statements in this program do not reflect those of Premier Investments and Wealth Management, LPL Financial, or their affiliates. Hello there, and welcome once again to another edition of the Premier Investments and Wealth Management program. I'm Doug Wagner along with Roger Abel. He's an accredited investment fiduciary, owner, wealth advisor at Premier Investments and Wealth Management, over 20 years of experience in the financial services industry, and Roger is known as the Big Kahuna. You know what? It's always good to talk to you. I look forward to this time of the week every single week, Roger.
I enjoy it too, but I feel like you need to bring a little bit more heat on the Kahuna.
A little bit more heat?
Well, there was a period of time where it was like getting introduced to the boxing match. I don't know if I'm getting boring or what it is, but it's just, all right.
It's much different. Next time, I'm going to get a vuvuzela out. That's what I'm going to do. They make it just do a vuvuzela.
Oh, my God. Well, we got to get it wild in here. We have to get people excited on Sunday mornings.
Exactly. Well, I know. You got to get up, get early, and Talk Radio 1190 and 1190talkradio.com, premieriwm.com. I want you to grab your phone, and what I want you to do is I want you to head over to premieriwm.com. If you don't have your phone, if you don't like using that, use a tablet, use your laptop, use your desktop. Premieriwm.com is where you go. Click on Get Started, and from there, you answer some questions. You get a one-page Premier Vision document. Are you ready for retirement? How confident are you? Are you ready to pay for your child's education in the future if you want to? How confident are you on that? And also other things that you may want to do in the future, like maybe you got that piece of hunting ground, or maybe you got that cabin on the lake or something like that up in the Panhandle that you're looking for, that you want to do. PremierIWM.com. Roger Abel and his friends here at Premier Investments and Wealth Management are going to be able to help you take the illusion out of investing.
Oh, I love the intro
today.
The illusion.
The illusion. Because that's what we're talking about, is the idea of investing illusions. Because
they're everywhere.
What's that?
They're everywhere.
Yeah. And everybody has them. The thing is, we get them from so many different places. And but here's the thing. They're illusions, but they have real influence. How many times have you watched somebody, a prestidigitator or a magician, do something, and you're like, that just defies the complete laws of physics. How do they do that? Now I believe that non-physics explanation.
There's always an explanation.
Okay.
There always is. I mean, every magic show, there's, Okay. So my wife and I watched the Chris Angel show in Vegas. Would have been 2000.
Something.
2017. Okay. It was our 15-year wedding anniversary. Okay. 2017.
Nice memory. Wife's impressed.
I try to do something nice if I do it on the the 5s and 10s, I can remember this stuff, Doug. So we went to
little hint for you guys. Yeah, not saying, just saying.
Just take care of them on the big ones, in between, but really take care of them on the big ones. And my wife's like, we could see what the tricks were. It wasn't like we didn't feel like it was that well done.
Right.
The illusion, though, is it's great. But if you really watch, you can see it happen. We went to a little magic show with my kids the other day. I was able to figure out what he was doing, but the kids couldn't. It was an illusion to them. Yeah. And in the investing world, there's illusions everywhere. There's just all these things that people believe they should do or they should execute. Then in reality, it's all just detrimental. In fact, There's a statistic in this outline that I'm so excited to talk about. I'm going to let you try to tell me what number it is as we get there. I'll let you know what it is. I'm just teasing it a little bit.
Okay, gotcha.
But I'm excited about today's outline and, some of the things that are illusions that are out there that we're going to debunk.
Illusion number 1. Volatility must be feared. Roger Abel, you say.
Well, I mean, you're not going to avoid volatility if you're going to invest in the stock market. It's just not going to happen.
Yeah.
And it doesn't need to be feared. It needs to be embraced. You have to understand how things work. This really goes back to, Doug, here's how you eliminate fearing volatility. Because everybody wants consistency.
Right.
Let's be honest. Everybody's dream is to make 8 to 12% a year with no volatility. All right? That's the dream. Not realistic. That's not going to happen. But if you understand what your risk capacity is and why you own certain investments, that helps eliminate the fear. And as we educate people, okay, if we take the S&P 500 back to 1984,
right?
Most people would say the stock market's been bad. If we ask in the last 5 years and 10 years, they're going to say it's been bad. Mm-hmm. It hasn't been bad. It's been great.
Yeah.
Back to 1984, it's averaged 11.33%. Mm-hmm. So why are we fearing volatility if it averaged 11.33%? Well,
yeah,
that's a 40-year time frame. There's a lot of people listening on a 40-year time frame. Mm-hmm. If you're 50, you probably still have a 40-year time frame because retirement isn't your time frame or your time horizon is not when you retire. It's when you die.
Right.
And people kind of have that flipped.
And the most important thing, I think, for me is like having been through that time and in working with you, full disclosure, I work with the financial professionals at Premier Investments and Wealth Management, is that if you're looking for volatility, you're going to find it. I mean, you'll manufacture it somewhere. That's the whole thing. The idea is, Roger, using these things as opportunities and not as obstacles.
Well, here's one of the things people do is they're looking for something that's not there. And we're just going to use short-term volatility as an example.
Okay.
Many people are very, very guilty of that, including professionals. Mm-hmm. I fall into my personal money trap sometimes with this. Oh, well, it's volatile. Wait a minute.
Yeah.
Listen, just invest the money. I had a friend of mine call me up the other day. He goes, well, I'm just going to wait for the market to come down. I'm like, well, okay. And I said, let's just use the example that the S&P 500 is at 5,400 points, okay, and it goes to 5,700 points, and then it goes down to 5,400. Mm-hmm. That's exactly the same as just buying right now.
Yeah.
And just get out of your own way. Mm-hmm. Like short-term volatility is way less impactful than we believe it is.
Yeah.
Everybody's concerned about what's going to be on my next statement.
Yeah.
Well, how about you worry what's going to be on your statement in 10 years? And a lot of people ask themselves, is now a good time to invest? And before we did this, I really thought about this show because I have some real life examples. But if you're asking yourself whether now is a good time to invest, it's difficult because we have some economic events happening that have us a little fearful. Unemployment's rising. We still have inflation. We're hearing higher interest rates for longer. So
job layoffs, all sorts of
and
stuff.
The market's at all-time highs. Okay. Hard to invest. And I'm going to give you a story. I used to day trade the yield curve, Treasury futures, back in 2007, 2008, with my own account, not with client money, my own account.
Yeah.
And a friend of mine taught me how to do this. And he always told me, when it's hard to buy the trade you want, like when it's hard to buy it because it doesn't look right, a lot of times that's the right time to do it. Right now, it's really hard to buy the stock market, right? Because you have all these factors and reasons why you shouldn't. It's easy to sell now, all-time highs, easy to sell. Mm-hmm. Well, when it's easy to buy, it's probably the wrong time too.
Yeah.
Right? It's never going to be easy to buy. Are you going to buy when it's down 10? No. You going to buy when it's down 15? No. You'll wait for it to go down 20 or 30, and then you wait for it to come back, and it's just the same exact thing as investing. There's no reason to wait. Ask yourself this question. In 10 years, what will my future self tell me I should have done? Mm-hmm. And if you look at 10-year-old rolling periods of time in the stock market, most of the time, your future self would have told you, just do it. Think back to 2008 and 9.
Oh, yeah.
The day before the stock market, October 2008. So September 2008, would you have been happy to invest money in today?
Yeah.
In September of 2008?
Right.
Well, you would have tripled your money, right?
Right.
Well, at the time in October, people said, this is the worst time ever to invest money.
Oh, yeah.
Only if you're concerned with short-term volatility.
And that's the thing, is getting past this mindset that you need to be looking in the long term. This is the worst program if you're looking for a stock pick. I'm going to tell you that right now. If you're looking for long-term results, that's what you come to Premier Investments and Wealth Management for.
Do you ever feel like your financial goals are just out of reach? It's time to take control of your future with Premier Investments and Wealth Management, your partner in financial independence. Imagine a financial plan that's as individual as you are. At Premier Investments and Wealth Management, our team of experienced advisors will work closely with you to create a roadmap tailored to your dreams, whether it's buying a home, retiring comfortably, or starting a business. We believe in transparency and education. We'll help simplify complex financial concepts, provide clear guidance, and empower you to make informed decisions. Financial wellness is within your grasp. Visit www.premieriwm.com to schedule a meeting with an experienced advisor today.
Roger Abel with me, Doug Wagner, on Talk Radio 1190, 1190talkradio.com, and on YouTube. This idea that there's an illusion, a set of illusions out there financially that we need to be aware of. Illusion number 2 is the idea that fixed income investments are risk-free. A lot of what you talk about doing, Roger, is you want to minimize risk in people's portfolios, is, to the degree that they want their risk to be managed or mitigated.
Or their risk capacity tells them they need to.
Yeah.
Right? Hey, you need to have X amount. And everybody who's retired should have some portion of liquid, safe type money. But remember, those still have risks. Every single investment out there has a level of risk. There's no such thing as a risk-free investment. You can, call a bank product risk-free. No, it's not. There's still risk at some level. Could be interest rate risk. It could be business risk. There's other risks that are there. And a lot of people like the idea of a near risk-free investment. Let's call it cash or CD. Well, the risk is the opportunity cost. Yeah. Let's think about it. The stock market's averaged 11.33% since 1984. That's through 2023. Bonds have averaged 6.23 and cash has averaged 3.29. We've been in a bond bull market for 40 years up until 2022. So, bonds have performed well, but there's an opportunity cost. If you sat in cash and lagged 8% a year with all of your money for the last 40 years, you did horribly.
Yeah, and not only that, you're looking at inflation, you look at the return, but you're also looking at taxes and things like that, longevity as well. This is something where I almost fell into this, and thank goodness you folks kind of let me work my way out of the situation, because when we got into COVID and I started looking at my 401k and my IRA, I was like, I want to put everything into cash. I'm going to pull everything out of the market because I want to just put it on the table right now so I can reinvest when the market hits its bottom.
I had someone going into this year, literally in December, I want to pull my money out because I know the stock market's going down, and then I'll reinvest it when it goes down. And I asked him, and his wife never even heard this. So the wife's like, what's happening? I mean, seriously, the wife's like, what are you talking about?
What are you talking about?
And I said, well, how do you know it's going down? This is going into this year. What's the market up? 10, 12, 13% this year? I go, how do you know it's going down? Well, because of this, and this. I'm like, listen, none of us know what's going to happen. I don't, you don't. Let's look at some different strategies and let's allow ourselves to not be market timers. But if it does go down, there's opportunity for us to reinvest at a lower value. And those are some of the things that we worked with this individual to do, is how do we create strategies that if the market does go down, we're not out. But we can take advantage of a down market.
Right. PremierIWM.com is the website. Head over there, click on Get Started, answer a few questions. You get your one-page Premier Vision document, or find out how ready you are for retirement or paying for your kids' education, or maybe that dream purchase that you've been saving or want to save up for the future. You can go to premieriwm.com as well, download a lot of information, make an appointment online, or call 800-383-6590. Doug Wagner along with Roger Abel on Talk Radio 1190 and 1190talkradio.com, the Premier Investments and Wealth Management Program. We're talking about illusions in investing for your future, and illusion number 3. Illusion number 3. We were talking about this a second ago.
We were. That people think they can predict bull and bear markets.
Yeah, of course.
They can't. Look, there's people out there that have been predicting this.
I think I found the number you're talking about.
Yeah. No, it's the next unreal.
Oh, it is? Okay.
It's market timing's impossible.
Number right there. Look at all those.
Oh, no, that is your number that you get.
Okay,
you're going to get that number because I don't even want to try to tackle it. I'm out. But, people think they can predict this stuff. They can't. We are horrible predictors of what's going to happen with the market.
Right.
There have been people predicting a catastrophic market meltdown since 2017. People who have actually been right in the past. Oh, it's going to melt down. Well, guess what? Well, from where they started in 2017 to where it is today, I mean, how much have you missed out on?
Yeah.
And people never talk about that. Market analyst, his name's Tom Lee. He's the perpetual bull.
Yeah.
He's the only guy out there who's a perpetual bull in the research world. Mm-hmm. Everybody else sells off of doom and gloom, right? Because, hey, being positive and optimistic, who buys that?
Right.
Think about this. You turn on the news. Do they talk about how great and sunny the weather was all across 95% of America?
No.
Or do they concentrate on the 5% that's the flooding, the tornado?
Yeah.
That's what sells.
Mm-hmm.
Most of everything that's happening is really pretty good. But I'm going to let you do the number because lots of people think they can market time. Okay.
I can't do that.
From 1926 to 1933, an investor had a point.
0.000. Yeah, I can't even do that many. We don't have enough time. We only
There's
have
got to be 75 zeros in there.
At least.
75 times.
2,288,3557% chance. So it's an infinitesimally small number percent chance of timing the market correctly all the time.
Yeah.
That's like hitting every single NCAA March Madness bracket every year since the 1980s.
Well, and here's why market timing's really tough. Mm-hmm. Really tough. You have to be right twice. Every single time. You have to be right when you get out. You have to be right when you get back in. It's not going to happen. And over time, we've been able to show people that timing the market is not as important as time in the market. Get your money in the market. Just like growing a tree, the best time to do it was yesterday.
Right.
Now, when I say that, in concert with the results of your financial plan, once you've quantified how much risk you need to take through figuring out your risk capacity, that's when you go invest the money. Just don't go willy-nilly this.
Right.
But if you're a 22-year-old and you're retiring at 60, just go get it in. Let it start working for you.
You know, that's another thing that you taught me as well, Roger, is this idea that once you're retired, that doesn't mean doesn't mean you can stop or should stop investing, because the people are going to be retiring. They still have 10, 15, 25 more years they're going to live, and they could be in danger of outliving their money if they don't have a financial plan in place to make sure that they don't. What's the number, the age that you look at that you say, okay, here's what we draw out for? The finals like 90, 92, 90.
Like what
it's
we
not
plan
just
for?
75 or 80.
Yeah, we plan for typically. So a little bit of this goes back to our process. I think the previous show we talked about our process.
Right.
Find out about their family tree. Do you have health issues? Mm-hmm. But the standard default's 92 for a male, 94 for a female, which is past mortality.
Right.
And people always bring that up. Well, this is way past mortality. Well, okay. Well, it is, but I don't want to be the person that when you're 84 years old, you come in my office and I have to tell you, your time's up.
Yeah.
Because we planned for 84, but you're super healthy and all your money's gone.
And not only that, look, the healthiest and best looking people invest with Premier Investments and Wealth Management.
Oh my gosh. I mean, people do tell me I have a voice for radio and a face for TV. Bad joke.
It's the other way around for me.
I mean, hey, you never know. You might gain some popularity here. But in all reality of the matter, it's where it gets down to you have to have some conversations with people. What's the longevity in your family? Mm-hmm. Okay, well, my great-grandma lived to 97. My grandma's 94. Well, I'm pretty sure my mom, unless something weird happens, she's likely going to live into her 90s. So, okay, should I use a 92 planning age for my mom when her mom's 94 and her grandma's 97?
Right.
Probably not. I probably need to push it out to 100. So this is where really dialing in a financial plan based upon somebody's unique set of circumstances is really important. And in conjunction with that, it's not just pushing out the age. You have to start to predict spending patterns. And what I mean, but how much is my grandma spending at 94?
Yeah.
Nothing.
Not a whole lot.
It's all on healthcare.
Right.
But there's no discretionary money being spent. It's literally on healthcare.
Yeah.
Maybe, get her hair done, have the gal come to the nursing home facility to get her perm done. Yeah. Like that's the discretionary money we have to spend. There's no more vacations, all those different things. So you just really have to dial in what everybody's unique situation is versus just giving blanket advice.
Yeah.
In a world filled with financial complexity, who will help guide you toward a brighter financial future? Look no further than Premier Investments and Wealth Management, your partner in financial success. At Premier Investments and Wealth Management, our commitment goes beyond numbers. It's about understanding your unique goals, dreams, and challenges. Our financial planning process is personalized to help you implement strategies designed with the goal of maximizing your outcomes. Whether it's saving for retirement, building wealth, or preserving your family's future, we've got you covered. Our mission is to simplify the complex world of finance and empower you to make smart, informed decisions. Ready to take control of your financial destiny? Visit www.premieriwm.com to get started. Premier Investments and Wealth Management, where your financial independence begins.
Thank you for dialing into the Premier Investments and Wealth Management financial program on Talk Radio 1190 and 1190talkradio.com. Doug Wagner along with Roger Abel from Premier Investments and Wealth Management, premieriwm.com. We've been going over the illusions of investing and the illusion 4, and I think maybe actually we do. I don't know if we have one more after this, but we'll find out. But the important thing is that this one is investing in winners is easy. There is a regular caller to a radio show that we do together who has a stock that they are absolutely, positively, 100% fixated on. And hey, it's done fabulously, but that's the one that they're just the ride or die, baby. And they think that investing in winners is easy. There are a lot of people who think that that's the case, but you say it's an illusion.
Yeah, because everybody can get lucky. Here's what individual securities do to your portfolio. Two things. One, it provides the opportunity to massively outperform or massively underperform the market based upon one security.
Yeah.
And many times it just puts too much risk into somebody's portfolio.
Right.
You've seen it with employer plans where people buy stock in their company and then the company goes out of business and they had an outweighted amount of money into that employer stock. I'm not saying individual stocks are bad. You just need to have very diversified portfolios,
right,
and understand what you own and what the risk is what you have. And hitting winners isn't easy. If it was easy, every single active mutual fund manager out there would outperform their benchmark in the stock market.
Yeah.
Only 20% do. Why is it? Because it's too hard to pick winners.
Right.
20% of active managers outperform.
You think about this. It's like we talked about. It's like picking the 64 teams that are going to go to a basketball tournament in advance every year as the season begins. I mean, that's why they're betting pools on that rather than investing pools on it, because it's a bet. It's not an investment at that.
Doug, most retail money is sucker money in the market. Okay. Think about it. How many people, when they buy an individual security, sit down, listen to the earnings call, read the financial reports, do some research on the company? No. What they did is they were at their barber shop and they got a hot stock tip from whoever at the barber shop about what they should buy, and then they go buy it. And they either get lucky or they don't. And it's one or the other. There was no research put into it. They think they're a professional because, man, this has done so well for 5 years. Okay, well, what happens when it doesn't?
Exactly. I mean, this is the important thing that you remember, that chasing winners is a losing battle, and that's what you talk about. By the way, is this up on your website somewhere, this little quilt? Do you know if it is or isn't?
Yeah, that's a I don't know. It's a Callan chart.
This is a fabulous
it is great,
chart
isn't it?
right here. the annual return percentage-wise of asset classes that are out there from 2009 to 2023.
Yeah, and so let me explain to the listeners who aren't watching this on YouTube what this is. You can go to premieriwm.com. I'll have Molly put it up there. It's a chart of what asset classes had the highest return and lowest return over the last 14 years, from 2009 to 2023. And people should think about how they select investments. Most people, when they're selecting their 401k investments on their own, they go and say, well, what did the best last year? And then they go put their money into that.
That one.
Like, that's human nature. It's not wrong. It's human nature. If you don't know what you're doing, just buy what's been doing good. It's called momentum. If you go look at this chart, only one time in the last 14 years was the same asset class had the best performance back-to-back years. Only one time.
Right.
So what it shows you most of the time, you don't know what's going to do well the next year. There's so many examples of what people predict is going to happen just doesn't come to fruition. It's why a well-crafted financial plan with an appropriate asset allocation just makes things so much easier. And this is not complicated. It doesn't have to be complicated.
That's what you talk about, moving beyond these illusions. It's critical, creating an asset allocation strategy. That's something that is flexible, but is still part of the overall financial plan that you're looking for. In the couple of minutes left, there's a couple of things. You can try this on your own if you want to, but Premier Investments in Wealth Management has the software, the technology in order to make sure that it gets done for you so you don't have to go through the minutia.
I actually don't think most people could create a financial plan on their own. Not a really well one, because they don't have the technology to do it. If you signed up for a service to buy the technology, then you could. But taking a pen and paper and running an Excel spreadsheet, you think you can do it, you can't. Not like this. Once again, you'll get an outcome. Whether it's an optimal outcome, I don't know. A couple things that the financial plan does. One, there's no part in that plan, Doug, that has anything to do with market timing. Nowhere in our plan says, do you have to time the market?
Right.
So if you do a plan, you can eliminate market timing. You don't have to think about it.
Right.
Okay, one. Two, it helps you figure out what your risk capacity is. Once you figure out what your appropriate risk capacity is, that's then when you can apply the asset allocation to it. So there's no guessing. We don't have to figure out, do we need to have 70% stock, or the program will guide you to what provides the highest probability or best confidence in retirement. And the plan gives you a clear picture of what's going to happen. And that's all this is. You walk out with a better sense of financial confidence, more financial direction. Right. It's the reason you get one of these done. You don't want to be part of the 74% of people that aren't confident about retirement.
It's critical. PremierIWM.com is the website. Head over there, click on Get Started, answer a few questions, get your one-page Premier Vision doc. You'll have the opportunity to make a no-obligation appointment with my friends over at Premier Investments in Wealth Management. You can do it online, or you can do it by calling this phone number,
800-383-6590.
The illusions, they should be all gone now, with a little bit of common sense and a lot of help from your friends at Premier Investments in Wealth Management. Look forward to moving forward in the future. For Roger Abel and the professionals behind the Premier Investments in Wealth Management logo, my name's Doug Wagner. Until next time, everybody, thanks for listening to Talk Radio 1190 and 1190talkradio.com.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments in Wealth Management and LPL Financial do not provide tax advice. Please consult your tax professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal.